What's up, everybody? Michael here. Guess what tomorrow is? A big econ drop, non-farm payrolls, and unemployment rate. What if I told you that I can tell you with a 68% probability that I know that the market is likely to move within a specific range? 68% probability. We're going to talk about that on today's episode. I know you're probably thinking, are you a wizard? Yes. Yes, I am. And we're going to talk about that today. In the Stock Market Brief Show, if you're new here, welcome to the channel. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. If you haven't done so already, hit that thumbs up. It is greatly appreciated. Quick housekeeping. Ignore the bots down there. I get some bot comments. I try to delete them. I've deleted and blocked hundreds, thousands, but they keep coming back. Let's get into today's show. All right, everybody, welcome back to the show. All right, we had an interesting day, interesting last couple of days as the market's rallying. Now we have this big econ drop coming. It's important to understand where the market might be headed, okay? And what you're seeing here on the chart are these blue lines going down the screen. Those blue lines going down the screen represent data drops, right? Those are when the jobs report came out. And we can just look at these last two drops. Clearly, market volatility happens in the S&P 500. This happened to be the case where it moved to the downside. Non-directional bias at this particular point in time. We'll talk more about that momentarily. But just understand here, it also moves the 10-year yield or the bond market and also the dollar. Look at these wild moves in the dollar on the last data drop and look at the 10-year yield on the last data drop. So expect some market movement. It might not happen right out of the gate. It might take a while for the market to digest the information, but it's important to be aware that this is actually a high impact, potentially high impact data drop that is coming out tomorrow, I believe, an hour before the market open. Now, the market has been rising higher, okay, these last couple of days. And specifically today, before you get all FOMO'd out on a complete screen of green, which we had a complete screen of green, and we had some big moving names, right? But a lot of these, like energy, for example, we talked about that yesterday, how it looks like we're going to see some sort of a bounce, and we did. All right. Not surprisingly, things were getting completely hammered, and we're starting to see, pretty decent moves in some of these big mega cap names too as well. However, if you really peek behind this curtain, one interesting thing to note is that high short interest stocks got ran up. And what I find interesting here, it's almost like short coverings taking place before a big econ drop. And what I mean like by high short interest stocks, well, let's take a look at just how big this squeeze was that took place in the markets today. Let's look at volume, the highest volume, and we'll look at a couple of pages here. These are all equities that have higher than 15% short interest. Okay, I just pulled the scan from FinViz. Okay, every single one today in the green. And we're talking big numbers too. Okay, so that's page one. Look at page two. Page two, everything was in the green except for two equities. That's crazy. Okay, let's go to page three. All of them in the green pretty heavily except for two equities. And then page four on top of that, all except for three. So yes, a lot of green was taking place today, but it seems to be some hedge funds short squeezing or covering short positions, and we're starting to see a big run up, which can cause a lot of FOMO in the markets. All right, and keep in mind, the S&P 500 is still technically in a downtrend. Right here, we're looking at a chart of the SPX, and you're going to see three moving averages, the 5, 10, 20. This is an old school timer. Okay, it's when basically all the moving averages cross over or under one another is when you get, the buy or sell signal and a potential change of momentum. So you can see here, boom, to the downside. All right, they tried to cross up over here, didn't last long, cross right back down, boom, sell side. Right over here, boom, we saw this big move to the upside, cross down to the downside, and so forth. Well, what we're seeing right here is actually the start of a crossover. We have the 5 above the 10 and the 20, and then we have the 10 crossing up through the 20. Now, be mindful that the 20 has not made its turn yet here. It's going to need a powerful move to do so. And we'll get into the volume profile here momentarily, but this is a good start overall, but be mindful of the trend. What do I mean by the trend? Well, let's look here. From here to here, from here to here. Okay, this is just a zigzag. These are looking at pivots. Clearly, what do you see? You see lower highs, and lower lows. So we're seeing a little bit of a rally, could be basing, okay? Because in the short term, we have a low and a higher low, and we have a high. So if we come out, that's going to create another high. So it's going to be higher highs and higher lows in the shorter time frame. So if this low down here is taken out, watch out, all right? Because that would just basically continue this trend to the downside, and we'll probably take out this low. All right, so that's the S&P 500, the NASDAQ composite. Very similar situation, seeing a nice rally here these last 4 days. And then you're starting to see that moving average crossover, except the 20 is still pointing down at this particular point in time. So that if this is actually a bottom, there's no need to chase really, because you'll probably see some sort of cross back and retest of these moving averages on the shorter time frame. And it'll give time to actually for this to turn around too. If this is actually a bottom, which we've been tracking since this specific day, and then we had our follow through day, then we had a couple distribution days from that point. We were tracking that on Twitter. But be mindful of the trend. What do I mean by the trend? Once again, the zigzag down, okay? You see lower highs and lower lows clearly throughout the screen, okay? Now, you can look at this right down here. You can start seeing it's potentially finding some sort of a bottom, some sort of a base, but just understand the overall trend clearly is to the downside still. Okay, and if we look at the S&P 500 a little bit more close up, you can see here these two blue lines. Those were the data drops as well on jobs reports, and you can see the last two. This was basically sideways price action, and then we had that big monster sell-off, and then right here you can see that was a pretty nasty, wild moving day on the jobs report, and we had some follow-through to the downside. Does that mean we're going to get the same situation, right? I couldn't tell you exactly, but we will look at what the options market is pricing in based off of future volatility, implied volatility, to get a good idea as the range at which the S&P 500 can move with a high likelihood that it will close within it. Okay, so let's take a look at the S&P 500 expected moves for the week, and you're going to see orange lines on the screen and then black dash lines. What are the black dash lines? That is the expected move that the options market priced in on Friday of last week for how much the market can move this week. Okay, and as you can see here, look where we came up to, right at about that upper edge of the expected move. Remember, 68% of the time it closes within it. Tomorrow, the market's pricing in about a 1.4% swing. Okay, so what does that look like on the screen? Look at the orange lines. So the orange lines can take us to around just under 395, maybe around 394, and that's basically in line with this prior swing high, and it's in confluence with a declining 50-day moving average. So you got to ask yourself, is this a great time to go FOMO into? I mean, in my opinion, no. Now, remember, 68% of the time it finishes within this weekly expected move. So if it comes outside of it, it may very well fade. So if we get a gap up, right, after the jobs report comes out and we get a gap up tomorrow morning and we open up here, we could very well potentially see a fade right back to the weekly upper expected move, okay? But then on the bottom side of it, remember, we can all close down here. There's a lot more risk to the downside than there is reward to the upside, because be mindful, the weekly expected move is down here. The jobs report expected move lower range is down here. And then you have the upper edges of it right up here. So you're looking at reward to the upside to potential risk to the downside. I hope that makes sense. Okay, and be aware that this is, it's based off of probability. So 68% of the time, right, it's likely to close within these ranges or move less than that range. Okay, doesn't mean that it can't, right? That'd be considered one standard deviation. Let's take a look at the 15-minute time frame. Zoom in. Neutral trend. It's been going sideways in this channel. We're right at the upper edge of the expected move. Okay, PMO is not giving us much data. It is above 0. RSI is above 50. This kind of flattened out. This is kind of a negative divergence as price is moving up. This is kind of just going flat. Same right here. A little bit of a divergence. Just kind of just grinded higher all day long. We talked about that a little bit yesterday as far as trade ideas go. Let's hop into the Qs. Okay, same situation here. On the lower edge of things, we have the jobs report expected move basically right here at the upper edge of the weekly expected move. And remember, this is all still within the cards as far as risk goes. All in the cards for risk, okay? But the options market is pricing in tomorrow, a potential move to around just under 300, all right, which closes the gap right here and basically is in confluence with that 50-day moving average. So the reward to the upside from where we stand right now is basically right around here. Okay, now it doesn't mean that it can't come outside of it, but just understand that the reward to the upside versus the risk to the potential downside, once again, it's a little bit skewed. Okay, so be aware of that. If you look at the 15-minute time frame, we are outside of the weekly expected move. Okay, this can happen, and it's happening right now. I assume that this could potentially pull back in and reconnect with this 5-day at some time because there has been a constant bid in the market. Last time we saw a constant bid, it really did move up, but then we started to reverse. You can see if you were to even draw a trend like this, maybe it comes up, closes the gap, and then we get some sort of digestion, some sort of a pullback. The 5-day moving average, it's inclining, so that's positive. Okay, so maybe watch for that type of a move to take place. But yeah, we just have not got any sort of digestion. I'm assuming that we're going to see some big volatile swings come into tomorrow's report. If you take a look at the IWM, the upper edge of the expected move for the jobs report brings us in line with the previous swing high right here, and then also in confluence with the 50-day moving average. Remember, a lot of small caps got squeezed today, those high short interest stocks. Okay, so that excitement can very well fade. It's very hard to get consistent multiple days of that type of action because it does typically fade, and we're coming into a jobs report. We will see. But we're up here at the weekly expected move, and then we have the implied move for the jobs report. So once again, reward to the upside is rather small versus the potential risk to the downside. Just heading into tomorrow's trading session, these ranges will be refreshed towards the end of tomorrow, but I wanted to get this out in front of you today. If you look at the 15-minute time frame, once again, just going sideways. We talked about this volume shelf profile over here. Boom, you can see sometimes these act as magnets, and you can see that it's very possible that, hey, if we start getting some sell side activity, start looking for a pullback to the 5-day moving average, it hasn't really started trending yet. It's rather neutral. But if we start pulling back into that area, that volume shelf profile can be an area of support in this kind of zone down here. One of the trades that we did say, we said if it pulls back to the 5-day, right, which it did the prior day, and then we said you can wait basically to see if it takes out this level. If you did wait, it gapped up and then started moving through it and basically closed at the high of the day or close to the high of the day. So if you caught that, this is what that buying the right side of the U-turn looks like, and catching some move to the upside. So decent moves overall in the market, but just be careful, right? We went over today the options implied move for tomorrow's jobs data, and then also compared that to where the weekly risk range is. Clearly, it shows that the reward to the upside is there, but it's a lot more minimal to the risk to the downside. So that's something to just be mindful of. If you guys like this type of content, you can always head over to my Patreon. Link is in the comment below and in the description. This is where I give a little bit extra content out. We do a swing trader platform. It's $9 a month, or just pay annually and one and done, right? It's in my opinion, it's very inexpensive. It's like $90 for the year, and I'm constantly posting my swing trade setup ideas. Okay, I give out my watch list. If I don't have the watch list, needs to be updated in a week, then I won't post it. But typically weekly there in Excel and PDF format. I even track expected moves for like 40 plus products, and I put that on there. So yeah, it's a bunch of value there. I will say that just be mindful that like this is not a program to come in here and just YOLO into stuff. I take my trades very seriously. I hope you do too as well, because this is, a lot of risk is out there. So my positions are well thought out when I take an entry, and they're well positioned for as far as position size goes to my portfolio. When you do sign up for this, I've been getting a lot of inquiries saying, have you posted for a while? I post almost every single day on Discord. This is Patreon. So once you get into Patreon, I don't really post on Patreon. So you'll get a welcome message, and the welcome message will tell you to sync up your Discord, because that's where I post everything. I post all the files there. I post the setups there. It's a lot easier, and it works a lot smoother. That's all I got for you, everybody. See you.